right, what's up, vlog? We're gonna jump right back into it. Thank you for joining again today. If you are joining, also, I'm in my backyard. My neighbors are doing something in their backyard with some kind of drill or something. So it, as usual, is gonna be a little noisy. All right, cool. So jump right back in. Same book. We're consistent. We are consistent. So we left off on chapter 5, business plan. So tools of the trade, chapter 5, business plan. The first step to getting started in day trading is to establish a business plan to ensure revenue is sufficient, expenses are contained, and the tax implications of day trading are fully accounted for beforehand. Business plans can also help day traders set goals and outline how they will be achieved on paper, providing them with the same benefits that entrepreneurs realize from putting their goals and plans into writing for banks and investors. When writing a business plan, the first thing to think about may be the amount of money required each month. Full-time day traders may require $5,000 per month in gross income, while part-time traders may be more flexible with their financial needs. These figures provide a great starting point to determine whether or not their goals are reasonable and ultimately help determine how much starting capital will be required to reach them. For example, suppose that a day trader wishes to make $2,000 per month, or roughly $24,000 per year. Knowing that a good year would yield 20% returns, the trader may estimate they will make 15%, which would mean that they would need $160,000 in starting capital. They may be able to borrow 50% of that on margin, which means the total they would need to come up with out of pocket may be closer to $107,000 after all is said and done. The next step is establishing a firm capital and time commitment to day trading based on assumptions made in earlier steps. When making these considerations, it's important for day traders to consider whether they'll be using their own capital to trade on behalf of a proprietary trading firm to reduce their potential risks. The amount of time dedicated to day trading should also correlate with the desired return on invested capital. After establishing these parameters, the next step is documenting some of the day-to-day tools and methods that will be used. Record keeping, performance reviews, and tax reporting are 3 important areas under this umbrella that should be carefully considered. Many brokers offer automated record-keeping tools as well as performance analytics, but day traders should check with their accountants to ensure these records are sufficient. Traders should also carefully think about how often performance metrics should be checked and how to address any potential problems with performance. The core of the business plan should consist of trading strategies and risk management techniques that will be used to generate consistent returns. In this section, day traders should provide specific details concerning their trading rules and past performance either in the live market ideally or when backtesting. The amount of leverage applied for and used when trading should also be specified in this section. Risk management rules should also be spelled out in detail, including default stop levels, maximum drawdowns, and other rules to follow when trading systems do not perform as expected. Finally, the business plan should include some compensation details. For example, day trading may specify how much money they intend to take out of the business as a salary and how much they will leave in the business to enhance future returns. These figures are important for setting expectations in time of success and failure. Level 2 quotes. The original day trader used ticker tape as his primary source of information. Ticker tape. After stock trades were executed, they were recorded and transmitted by telegraph to traders, who had received printouts known as ticker tape through a stock ticker machine. The readings would include the ticker symbol, execution price, and number of shares transacted. These readings provided key insights into where traders and investors were putting their capital. Modern stock quotes are delivered electronically through brokers or financial data providers. The real-time ticker on the bottom of CNBC's cable television show indicates the latest transactions occurring in popular stocks for the day. While most traders view quotes through their broker platforms at the time of purchase, these external real-time stock tickers are used to highlight hot news and events are affecting stocks in the moment. In addition to the latest trades, day traders have access to a plethora of other data points, including the complete order book for a stock. The order book contains all of the outstanding limit orders on both the bid side and ask side of the trade. For example, the bid side of an order book may have an entry starting $1.43 times 200, which indicates that there's a limit order to buy 200 shares of stock at $1.43 per share. A trade is executed when a bid is matched to an ask within an order book for a set number of shares. After the trade is executed, the transition will appear on the time and sales data feed, and the latest price of the stock will be updated everywhere. These simple transactions dictate how stock prices move over time, driven by the constant matching of bid and ask prices from an order book. Some days traders believe that the only information necessary to trade in the short term is the order book. By looking at the sizes of orders at various prices, they can identify areas of support and resistance for prices. Traders can also gauge the momentum of a stock by looking at where the large block orders are being placed relative to smaller block orders, where a block represents the number of shares being traded. Interesting. Level of quotes. There are 4 levels of stock quotes available within the market. Level 1 quotes provide a basic real-time quote that shows the latest price and the closest bid-ask prices and levels to that price. For example, a level 1 quote may show a current price of $9.89 per share, a bid of $9.88 times 100, and an ask of $9.90 times 200. Level 2 quotes provide a look into a complete order book where a trader can see a complete list of open limit orders on both the bid side and the ask side. These quotes are broken down based on the market maker that's providing the quote. Total view. The Nasdaq's total view goes a step further than level 2 quotes by offering more market depth and by grouping various orders by market participant in order to get a clear picture of who stands where. Level 3. Level 3 quotes are restricted to NASD member firms, providing all of the functionality of level 1 and level 2 quotes with the additional ability to change orders and send information. As a result, these quotes usually don't apply to retail day traders. Reading quotes. Level 2 quotes are the most popular type of quotes used by retail day traders. While some brokers provide free level 2 access, others may charge extra for the option to see those quotes in real time. In basic terms, these quotes are useful when determining the strength of support and resistance levels by looking at open orders around those prices. So-called depth charts can visually show where the largest open limit orders are concentrated. I need pen and paper for this. Had to go get the notebook real quick. Take some notes because Justin K is dropping some fire right now. You know the TikToks where they're like information that should be like illegal or like just it feels like illegal to know? I would say he just hit it, yeah. So-called depth charts can visually show where the largest open limit orders are concentrated. That's worth writing down. All right, and not only about that, but just looking at level 2 as well, that's really worth writing down. All right, so there's a figure here. In figure 1, the left column represents bid orders or buyers, and the right column represents ask orders or sellers. In each column, traders can find the market maker responsible for the order, the limit price for the order to be executed at, and the quantity of shares associated with the order. So in each column, traders can find the market maker responsible for the order, the limit price for the order to be executed at, the quantity of shares associated with the order, and the areas with large blocks of bid or ask shares represent the key areas that day traders should watch in conjunction with the support and resistance levels seen on stock charts. Market makers are identified by a four-letter abbreviation, with many of them associated with a certain brokerage firm or other entity participating in the financial markets. In general, market makers can be divided into either wholesale trades, retail trades, or ECNs, where wholesale trades are those placed by institutional traders, retail trades are those placed by retail brokers, and ECNs are simply electronic networks that handle either type of trade. Where are we? Some common market makers are NITE, Knight Securities, SCHB, UBS Capital Markets, TDCM, TD Waterhouse, ETRD, E-Trade Capital Markets, ARCA, Archipelago, I believe is how that's pronounced. The largest market maker in a given security that's controlling the action is known as the AX in day trading circles. Is that AX or, okay, is known as the AX in day trading circles, although they aren't always present in a given stock. In general, day traders should pay attention to the direction that the AX is pushing prices in order to ensure that they are on the right side of the trade. However, the AX may also route orders to ECNs in order to avoid publishing their trades under their normal market maker code. Wow. It is also important to realize that trades do not have to go through these venues and be reported. While there's a risk that some orders aren't showing up on level 2 order books, many large institutional traders will advertise their bid and ask orders in order to make executing them easier. The reality is that unadvertised orders do not have a significant impact on the market, since they consist largely of smaller block sizes. To watch, level 2 quotes provide a lot of different insights for day traders to use when deciding whether or not to buy a stock. Some traders prefer to use level 2 quotes and the order books as their primary source of information when placing trades. For instance, traders may identify a trading range based on big block orders at a certain bid and ask price. Within that range, traders may focus on making trades along with the largest blocks at the time until the price approaches the resistance level and then exit the position. The trader may also use insights gleaned from which market makers are placing the orders by differentiating between stronger institutional accounts and weaker retail accounts. In addition to providing on-the-spot insight to day traders, level 2 quotes and order books can be used within trading systems to improve the odds of successful trades by incorporating a greater amount of information about the market. A trader might qualify support and resistance levels by looking at market depth chart at those prices. If a trader finds a support level with no substantial bid orders supporting it, he might put in a greater number of safeguards in order to protect against a breakdown that may be more likely to occur under these market circumstances. In either case, the most important thing that level 2 quotes do is provide a confirmation of support or resistance by levels, by showing where large blocks of shares are placed. For instance, if stock recently began falling from its highs and a large block stands at a bid price of $2, day traders can assume that $2 will be the next major support level. Important dynamics to watch. Market makers. Market makers may exhibit certain trading patterns that day traders can recognize and profit from over time. Oftentimes, day traders will watch the market makers and a given stock over time and get a feel for how they act throughout the day. Depth chart. The depth chart shows where the largest volume is concentrated in terms of price in order to show areas of potential support and resistance. By using these levels, day traders can validate chart patterns or other indicators. The depth chart shows where the largest volume is concentrated in terms of price in order to show areas of potential support and resistance. By using these levels, day traders can validate chart patterns or other indicators. That's awesome. Bars. Intentions. Institutional traders and other traders in the market may place bid and ask orders without ever intending to execute them, just so they can spook other traders in the market into taking action. They can then get their other orders filled at a good price. Day traders who understand these dynamics can use them to their advantage. Risks and other considerations. Level 2 quotes are a great way for day traders to gain additional insights into the forces behind price changes over time. But the quote should be taken with a grain of salt because it's possible for a lot of the true story to be masked. For example, a larger trader could route his trades through an ECN to disguise the source of the trades, which makes it difficult to confirm or deny that a single larger buyer is accumulating stock. Traders may also place orders that are never meant to be executed in order to trick others in the market. These are known as ghosts and could either be indicative of a large trader changing his mind or someone trying to drum up support without putting the capital behind it. The only way to confirm that an order is executed is to cross-check it against the time and sells data feed by looking for smaller block sizes that have been executed. In the end, level 2 quotes and order books are a vital source of information for day traders since they provide a lot of additional information to support other forms of technical analysis. Quick recap. Capital is the single largest requirement for day traders, with at least $25,000 in starting capital required for pattern day traders in the U.S. equity markets. In general, most traders should use margin to leverage their positions by up to 50%. Time is the second largest requirement for day traders. While part-time day trading is a possibility, the most successful traders devote themselves full-time to the profession. Proprietary trading may also offer a path to full-time involvement for many beginners. A comprehensive business plan to set expectations and think through a career decision before making the jump. These plans should include as much information as possible and take into account all possible risk factors. Direct access trading accounts are ideal because they lower the cost for higher volume day trading compared to traditional brokerage accounts. Execution times are also improved since traders are interacting directly with exchanges. Day traders write and follow a detailed business plan that includes how much they plan to invest and how much they anticipate making. By doing so, traders can help set the right expectations from the start and improve the odds of success over the long term. Level 2 quotes represent a final requirement for day traders since they provide real-time insights into price movements. By examining these quotes, traders can discern what prices have the highest amount of volume associated with them. All right, yeah, and that is it. I hope you took some notes if you're watching this, because this chapter was just absolutely fire. Like, I wasn't expecting all this, but it was really good. It's really good. Sometimes you hear things, but it doesn't really register to you at the time. You can even hear things multiple times and they may not register to you. A lot of the things that he's talking about in this chapter, I've heard a number of times, but for some reason it just resonated right now. It's one of the reasons why I like paper books. I feel, for me, I think there's a deeper level of comprehension. So anyway, that was a really good read. And once again, we got through a whole chapter. So if you're following, I will see you back next time for chapter 6, charting and patterns. Can't lie, I'm excited. I might just fucking do it today. I might just fucking do it.